Welcome back to my channel, and in this video we're going to talk about how to make $10,000 from this blue chip stock, part 2. So previously I talked about the stock pick that can help you make $10,000 if you invest $30,000 and make 30% return. So that is Disney. I mentioned that the entry range is somewhere between 135 to 110 because I do expect that there would be a drop. And even though it wasn't apparent at that time on what the reason it could be or why it would be dropping, for the last couple of weeks, it dropped to 115 level, which is within the target range. So now I want to do an updated video for it because I just bought more Disney. So let's dive in. So coming back to the chart, the goal here is really to make 30% from Disney. Now, previously I said the range is 135 to 110, so that's actually what Disney has been ranging within the last 4 or 5 weeks. And now you can see it is bouncing back after the interest rate hike of 50 basis points. So here you can see that we're still aiming for 30%. And if you are watching this video for the first time and you haven't entered yet, now we're really near the bottom of the entry range that I'm initially looking at. And if you compare that to the COVID level, it was back in what, $80, $90 was the absolute bottom. And when you think about it, unless something very catastrophic happened, it's very hard for Disney to get there. So then just today, I bought more Disney at this price. So if you're getting in at this price now, let me help you calculate what is the target exit price you'll be aiming for to make 30%. So that would be 115 times 1.3. So approximately $150 is what you need to make 30%, which I think is quite achievable within the next 12 months. In fact, if you're looking at the technical analysis I drew here, I am expecting a turning point in late June to July. So if you are still hesitating, you can do your research on fundamental technical analysis, news, and so on. And you can still buy it before July is my guess. Now, next week, we do have Disney earnings coming up, which can be quite volatile. And it will be ranging within this area for now, I think. It might spike up early, so that's why I'm buying today. So if you are interested, I would suggest to buy some before earnings and some after earnings as well. So then you will have an average price for the position before and after earnings. Now, some of the risks that are in the background that we pay attention to within Investing Accelerator. The first one is really the Florida tax bill. They revoked Disney's special tax status, and the effect is still unknown. So right now, people think it's going to be $1 billion debt or whatever, hyping up the bad news. But I think most of that has already been priced in from $135 down to $115. So one thing I do want to mention that when it comes to risk management, I do teach how to use a hedge within Investing Accelerator. So you might be wondering, well, why do you need to use a hedge, or when do you need to use a hedge? And Disney is actually the perfect example of using the hedge. So if you go back in the timeline, we have been tracking Disney for a while. We initially started investing like 4-6 weeks ago, but we actually have been tracking it for 2-3 months. So when we start analyzing a stock, we don't invest in it immediately. We wait for the right moment to invest in it. And even so, we might be wrong, or we might be a little bit too early in this case. So what we do is we include a hedge. So then if Disney suddenly goes down, which actually it did, then we would make profit from the hedge. For Disney's case, initially, I actually didn't enter into a hedge because the bill did not get announced yet. So that was actually something that happened in the future after I uploaded the previous video. So at that point, for the Florida bill, I reviewed the details and I decided that it wasn't fully priced in the market. So meaning that there's some room for it to drop. So then what I did was I entered into a hedge, which requires the use of options, and that would reduce the downside volatility of my position in the short term. So it was a short-term hedge, and I just closed out my hedge today, and I made around 41% from the hedge itself. So while the percentage you gain from the hedge is not that important, what's important is actually the protection you gain within this period when Disney is going down. After that, I use the money I made from the hedge to buy more Disney. So, which is why when you're looking at entering into your positions, you don't need to enter everything at once, which is fine if you do. You just need to have more patience. I usually enter in increments, and I also use a hedge to reduce my volatility and downside risk. And any money made from the hedge will be used to further average down into my position, which gets me a better price long term and also gets me to 30% faster. So it is quite an advanced topic. So if you didn't really understood what I said, I covered it in detail in Investing Accelerator. But yeah, don't worry about it if you're using stocks. It's just if I'm using options, that's when you need the extra protection. Now, another thing coming up this weekend is really Doctor Strange movie. And then they're also starting to promote a lot of the other movies under Disney, including Thor, Love and Thunder. And also for Disney Plus, they have Obi-Wan Kenobi coming up as well. So I think those will be positive and bring the share price up as well. So if you do end up investing $30,000 and within the next 12 months, you make $10,000, which is 30% return, then I think that would be more than enough to cover the tuition for Investing Accelerator. So if you're interested in learning more about Investing Accelerator, then you can go to my website to check it out. So the price for Investing Accelerator is $7,000 USD. So if you do make $10,000 from Disney, then that will be more than enough to cover the tuition of the program. And it is a lifetime membership. So if you are interested in being part of Investing Accelerator and you know what it is about and you have gone through the webinar, then you can schedule a call with myself or my team down below in the first link in the description. It will be a 45-minute call and I'll answer any remaining questions you have. And yeah, that's pretty much it. So for Disney, it is really a long-term investment. You can use stocks to invest and make 30% return. And if you use options, then make sure you understand the risk and the option strategy within Investing Accelerator. We do go through that in detail. So for Disney, I'm actually using options for this trade. So we'll see how that goes. And I'll see you in the next one.